Hey, welcome everyone. So good to have you with us this evening. So good to see all your names dropping in there. I can see you all filing in. So good to have you with us live right now. And obviously, if you're watching this recording later and you're part of our community around the world, lots of love to you as well. I know you might be sleeping right now at this particular moment, but whenever it is, you're watching it, you're with us, and tonight's going to be an exciting time. So guys, drop some love in the chat. Maybe drop live trade in the chat if you enjoyed our Thursday morning's first ever live trading analysis session with Dad last week Thursday. So drop trading in the chat if you enjoyed that session. We are doing another one this week. It was cool to see a couple dozen of you bright and early on there at 5 in the morning last week Thursday. So we're doing it again this week. Cool to see a few of you on there. Some of you may have been sleeping. I see those Z's, cat. But it's going to be fun. We're going to do it again. And we've got a whole roadmap mapped out all the way for the next couple of months, guys, of what we're doing on Tuesday nights, what we're doing on Thursday mornings, and when our next live event is. So at the end of tonight's session, I'm going to dive into details of what we're doing when. But we are doing another live session this Thursday morning, and I've got another very special Zoom happening on Thursday night, which is totally different, but I'm going to drop an announcement in the Fit Life Facebook group for that. Rich and I are doing something really special on there. But guys, without further ado, I'm excited to dive into this evening. I know we've got Dad with us. We've got all of you that are busy rocking it with this indicator, getting more and more used to it, I hope by now. And it does take time. I said something at the live event about, we're on this journey to kind of get rid of the training wheels, which is why right now, obviously, we've got version 2 that we're testing out things and messing around with some things like counter trade signals and things like that, which I know you all want. But if you have that too early, the tension will be not learning how to walk before you start running, and you just really have to get the rules baked in before diving into things like counter trend trades and whatnot. So anyway, some real fun updates coming with that, which I'm sure Dad might give us a little bit of a little teaser taste tonight. But otherwise, we thought it'd be really cool to go through some other details tonight to just reinforce where we're all at in learning this, some key points around pivots, how price action moves around, and little secrets with how price bounces between lines like that, and definitely some time for Q&A at the end. So without further ado, guys, let me find you, Dad, on the side here, pin you to the screen, and we can get rocking and rolling.
Rocking and rolling.
Let's see.
Yeah, awesome. Well, the chart I'll put on my live chart in a minute, but just welcome everyone. It's so good to be again doing a live Zoom with you all. I just love our community and the sense of family that's developing between us. I loved our live event. That was really fun. It was so good to meet some of you face to face. I hadn't met everyone. They were just names or pictures, but it was really good to see your faces. And again, I love one of my core values is family, doing things together in community. So it was really awesome to meet you. Meet a lot of you guys and ask questions and answer questions and things like that. I mean, we're all in a journey, and I think I've said it every time, trading, it's a marathon, not a sprint. So it does take time. It's not an overnight success. I think I said last time, no one becomes a lawyer, studying for 3 months or even 1 year. Skills do take time. It takes patience, takes perseverance, but if you stick with it, you will succeed. Everyone can trade if they just stick with the process. And so it's really been great, developing this. As Ty said, we are getting excited about version 2. There's some exciting things we're working with that will see us making more pips. And also the live Zoom, it seems like you're keen, so we're going to do that again. Tyron mentioned. It was the first time I'd done one. So I learned a little bit from that, and I think the next one's going to be even better. And hopefully we'll see some movement. So I want to talk mainly about the rules tonight. And so there have been a lot of questions about the rules specifically too, just to really reinforce them. When you're learning a new strategy, remember this is, a lot of people would think, okay, if this is new, it's going to work instantly. With every strategy, you have to learn. There are rules. You got to learn patience, discipline, get familiar. And I think I said before too, when at first you look at this indicator, there's a lot of stuff out there. We always use the term, it's like a Christmas tree, very appropriate for this time of the year. But it is, but eventually, when you look at it, it won't look so noisy. I know the first time I saw a chart with one of the original strategies, it was just, I didn't understand a thing. It wasn't even as noisy as this one, but yet it looked very noisy. But eventually, it will become more and more familiar. And eventually, you'll be able to take one glance and almost know whether to take a trade or not. So I really just want to emphasize, just reinforce some of the entry rules and maybe look at just the trade I took this morning. And also, it was quite rangy, how to make safe trades in range. So Ty, I'm going to click on share and see if you can allow me to share my screen. How is that looking? Can you see my screen, everyone?
Yeah, perfect.
Okay, I just want to try and minimize. I always have the problem of some of the screen hiding. Okay, so I'll just work around that. So here we are. So here we are on the Dow. I love the Dow. All right, so it's definitely one of my go-to. And I was saying to Ty, I still look at the Dow and the NAS together, but I used to often do two trades at once. But you probably have noticed if you're looking at the Dow and the NAS, they're going in opposite directions. Like the NAS is falling, the Dow is more in a downtrend while the NAS has been up. So I may just specialize more in the Dow in the next weeks until there's some kind of joint rhythm. All right, so let's just go through those rules. I think you'll know by now there's the main entry rules. We use the acronym TOSS, TOSS. So T is for the trend zones, O is for the outer range bands, S is for the signal, and the other S is for space. And so those are four very important rules. And remember, we gave points to each. So the T for the trend zones gets 3, the orbs get 3, the signal also gets 3, and space just gets 1. Either there's space or no space. And after I've talked a little bit about the entry rules again, then we're going to just have a look at the pivots, and because they are often relevant to especially the fourth rule about space, whether you go for TP3 or not. So let's just go. I'm just going to flick back to this morning. So I took a trade. Let's just find that trade I took. So I'm just going to walk through that quickly. I mean, gee, look how price. Let me just show the 8-minute quickly. Look at this great signal on the 8-minute. Price has been really falling. So there was a signal at 736. It's already dropped, 80 pips. So Dow really falling on the 3-minute there. That would have been a great trade. I mean, it's on all time frame. So I want to go just to this morning. There was also that big, after I stopped trading, of course, there was that massive move. So let me just scroll back and look at the rules at the time I was trading. So 1 minute, just dragging it back. All right, so where was I? I'll recognize the chart from this morning. All right, here we are. So here we go. I'll just get the 3-minute lined up. So what time that trade I took was at 5:59. I kind of slept in a bit, so I only got up at about 20 minutes before that. So it's great to just, let me get the 3-minute lined up. I was trying to work out how to get the names to the bottom of the screen. There we go. Cool. So I can see most of my screen now. Now the names are blocked out my time zones. See if I can just move it. Okay, there we go. So let's get back to this morning. Here we go. All right, so let's just have a look at this trade. And I want to show you a few things. So if you just look, for example, if you woke up, I'm just going to blow out the 3-minute. So a lot of us would have been awake around about the 3 minutes. So I'm trying to get rid of your faces, but I can't. They keep coming back. Oh, there we go. They're on the left. That should work. So if you look at the 3 minutes, so maybe some of you got up at 5. I mean, that looked very rangy. I mean, clearly a downtrend. And so it would have been hard if you're on the 3-minute try and pick out, oh, should I trade, should I not? But if you understand a little bit of price action and candles, especially Heikin-ashi, we can see how you can still get some trades even when it's rangy. So let me just go back to that trade again. Here we are. So let's look at this trade. So I took this trade. Here we go, 5:59. I hit sell. And so there were good reasons to take this trade. If we looked firstly at the trend zones, so on the 1 minute, we just were in the crossover on both. You can see the MACD down there just crossing over. What I liked about this trade was that the oscillator was bright. So we'll come back to that in a minute. But the key thing, a lot of people have been asking about the 3 points for the trend zones. And the key thing, you just got to remember what I keep saying about, my screen's moved here, but let me just get back to where I was, sorry, on the 3-minute. In terms of high time frames, bully, lower time frames. So if you looked here at this sell I took 5:59, the time, it wasn't exactly crossing over, almost slightly in a buy zone. But if we looked, especially at the 8-minute, if we go to the 8-minute at the same time at 5:59, we can see we're in a very strong downtrend. Look at the gap between the 21 and the 13. So that is clearly in a downtrend. And likewise, the MACD, although it's slightly hidden with faces in place, again, you can see there's space. That MACD is clearly in a downtrend. Also, on the M3, you're going to look carefully at what's happening here. Whenever these converge, clearly we can see the 21's in a downtrend, 55, 233, everything's in a downtrend. That hadn't quite crossed over at the point of entry, But again, high time frames bully lower time frames. So the 8-minute is telling me that's going to be a safe trade because we're clearly in a downtrend. And so you would have got probably 2 out of 3 for that one if you're very like legalistic. So that was strong. In terms of the signals, we hadn't quite got the reverse down here. But again, on high time frames, we were down, and definitely on the 8-minute, we're all down. So the signal was 2 out of 3 on the lower time frame, but again, the high time frames are also down. And so the orbs, I mean, they've since disappeared, but the orbs are all in position. And a lot of people have been also questioning about the position of the signal. Now, remember, for orbs, there's 3 points. I mean, it's ideal if the signal is towards the right-hand side for both, obviously, buys and sells. But as long as the orbs are the right color in the right direction, you're going to get 2 out of 3 for the orbs. So if you think of the trend zones, 2 out of 3, the orbs 2 out of 3, your signal may be 3 out of 3, there may be enough space. You know, already, even if the orbs, you're not getting the signal on the right, you're already going to get an 8 out of 10, which is a strong signal. But the best part about the signal, if you can pick up, I've said there's the magic source of this indicator. The one of the magic source is this 55, which is equivalent to the 3-minute trend zone. On the signal, I was saying to Ty this afternoon, whenever the sell signal is close to the 55, and the 55 is bright, obviously green for a buy, red for a sell, there's a strong chance that trade is going to move. And so we see here that on that sell signal, when I saw the 55 as bright red, I knew, man, that's definitely going to push down. But the other things to look at here too. So what else made this a good trade to take is this is why I like Heikin-ashi candles. And this strategy works well with normal candles. But I love Heikin-ashi candles because they give you a lot of information. There's less candles to learn. So, I mean, basically, there are 3 shapes. They're either bullish, or they're dojis, or they're bearish. And so if we look at what it would have been safe trades in range, on the signal, so the sell signal came at 559. If we looked here, what was happening, let me just see if I can get my drawings going. So if you look at this area over here, when I took the signal, we can see what's happening. Can you see there was a bearish candle, flat bottom, going up? Then there was a doji. So on the signal, so if we look at the signal on the 3-minute, there was a doji. Sorry, from the 1-minute, the signal on the 1-minute, there was a doji on the 3-minute. And as soon as I saw that, and what I like about it doesn't happen every time, but everything about trading is probabilities. That's a red doji. In a downtrend, I knew that after that, there would be a flat top. And so this is a key pattern. I said this at the live event. Whenever you see a bullish and a doji and a bearish, that means the trend is definitely going to move in line with the last closing candle, which is a bearish candle. So although the bearish candle only came on the 2nd candle, I entered sell. Boom, once that 2nd candle formed and I confirmed what I thought, there's a strong bearish candle, I knew that this trade was going to move down. So always keep a lookout for that pattern. So if you're looking for a sell, bullish, doji, bearish. So let me just delete this. So if I can just go off the screen. So if I just blow up, well, let's just move across because there's another signal here that wasn't as strong. You still got to got pips. With this signal here, obviously we in the 1-minute, the zones were not aligned. But again, you're in a downtrend. Although the 55 is not strong, prices rejected this area. And if we have a look here, prices rejected the 21 on the 3-minute. The zones are not aligned, but again, the high time frames, if you look at the 8-minute, at the time of this signal, the 8-minute was clearly down. So the point I'm trying to make is that I think a lot of us we're looking at just the 1-minute and thinking the zones are not aligned. For example, this signal zones were not aligned, but always look to the high time frame. The 8-minute is still very much down, which makes that a safe trade. Even though you would only get 2 out of 3 for the zones there, the fact that the high time frames are down means it's still going to head down. But if you look further at this signal over here, so if you look at the signal here, this was at 6:48. Okay, again, on the 1-minute, the trend zone's not aligned because it's still blue. But this will happen quite often when there's a big pullback. You can see price was very rangy. Look at the size of these pullbacks. Price comes down, moves up, comes down. In very rangy conditions, you will find that the 1 minute trend zone will not always be aligned. So it doesn't mean don't take the trade. Can you see what else would have made? I mean, this trade moved quite far from the entry price. Let me just see if I can get. So look at this trade. From that entry price all the way down to that pivot, there was like 30 pips in that trade. So this happens quite a lot. When it's rangy, the immediate zone, the low time frame zone, like the 1 minute, you may still see blue there. I mean, fortunately, the MACD was crossing over, which made it safely. But always look to the high time zones. So if you took that signal over there, what made this another high probability trade was, again, look what was happening on the 3 minutes. If I just take the 3 minute out and highlight this area here, can you see that same pattern? You can see there was a bullish candle, then there was a doji, then there was a bearish. So price, we can see the 21, which I said at the open event, the direction of the 21 is one of the great indicators of trend direction. This is clearly the white SMA 21 is heading all the way down. Plus, you can see we got this pattern, bearish, doji, bullish. Hopefully, is it clear? Hopefully, you can all see that. So although the 1 minute was not completely aligned, they're still slightly in buy zone. We can see whenever you see this pattern, it's guaranteed to move. And likewise, even, okay, I was going down a bunny trail, but I'll leave that for when we launch too. So those would have been signals. So you can see that I don't want to repeat myself too much. I'll say it again. So this is really key to see opportunities. When the 1 minute is not aligned, look at high time frames. Look at the 8, look at the 3, and especially look out for this pattern. Obviously, if it was a buy, look for the opposite. Look for a bearish, look for a doji, then look for a flat bottom bullish candle. So that's why I really do like trading with Heikin-ashi candles. They give you a lot of information, especially with trend change. And so that, again, the two big things that some people are tripping up on, some people weren't taking trades because the 1 minute wasn't aligned. Look to higher time frames and look for this pattern. If you're trading with Heikin-ashi, look for bearish, doji, bullish, or the other way around if you're doing buys or sells. So look for that. And again, with the outer range bands, it's if the signal's close to the right, you get 3. But as long as they are in the right color, in the right direction, and again, high time frames, bully, lower time frames. So have a look at what the high time frames are doing. Sometimes in pullbacks, they may flatten out on the 1 minute, but then on 3 minute, they may be clearly showing still a downtrend. And then obviously with the signal, we're looking for seller momentum. In this case, there was a sell. We want to see that there is a diamond. That indicates price now. So this is for version 2. I've already clicked some of version 2 off. I've put the diamond on the other side and explain that. So yours will still be on the top, but there's a good reason for moving that. You'll see when we launch version 2. So before that signal came, we could already see there was seller momentum. At the same time, we can see down in the oscillator, although it wasn't bright red, we can see that we got a triangle down, meaning that previous move up has reversed. So that would give us 2 out of 3. We hadn't yet got to where we're looking now. We hadn't got to bright red. So that would have been a 2 out of 3 on that signal. But remember, high time frames, bully, lower time frames. We can see on the 3 minute, we got the trend line and the circles are bright. That is dark red, meaning it's potential pullback. But if again, you look on the high time frames at the time of that signal, on the 1 minute, if you're looking at the 3 minute, you can see we're all bright red. Definitely price was in a strong downtrend, making that a very safe trade. All right, so I want to just now transition over to looking at pivots. Let me just delete this. I can't see questions because I've got my screen filling up here.
Only one to consider. I'm not just one about the POC earlier on that trade that you took, trading through it, being a risk. I guess my question is, would it have been fixed in place where it is right now when you took that trade?
Where we're looking now at the
sell that you took on the Dow this morning.
Yep.
Obviously, the POC was sitting there, or was it? Is my question.
I think it was there.
Okay.
But again, on the higher time frame, there was such a strong downtrend that, I mean, my gut feel was it would break through, especially because
Right.
This was the real key. Again, the magic source is the 55. So that 55 going bright. Now remember, that is this EMA is 55 minutes worth of information at that particular point. So on the sell signal, after 55 minutes of calculation, this EMA 55 is saying price is really going to fall. So I jumped in based also on the doji. I knew would become bearish. So, I mean, there was an element of risk, but I said the magic source was we had the EMA 55. To me, that outweighed, plus down on the oscillator, there was also bright green. So my gut feel was that was definitely going to push down. So hopefully that answers that question.
Yeah, nice one. As you were?
As we're okay. So what I'm going to do now, I'm going to blow up I'm going to look at the caramel, these pivots on the 3 minute. So just so we can get a greater span. So let's just, where are we now? So these pivots are based on Camarillas, but I think I said what I discovered purely by accident was that when I changed to my candles to a Heikin-ashi, the pivots moved to completely different places. So, I mean, that was purely by accident. And the more I looked at it, the more I realized that, and it's just my observation, is that they become more accurate using Heikin-ashi. Now, they still work with normal candles and they will respect certain positions. But I've found with Heikin-ashi candles, these pivots are really strong. So all they're based on, so these pivots are basically based on the previous, if they are daily. So what I've done, I've loaded just the Camarilla indicator by itself. This is how I've built this indicator. Whatever I wanted to add, I would first create a separate indicator, build it, test it. So I've got a separate indicator now for these pivots. So if you look, basically there's daily, weekly, monthly, and quarterly. There's 4 different levels. And so the way they are calculated, you get normal pivots. There are a number of different ways pivots are calculated, but I found that these are the best pivots, the most accurate for the strategy. So every level, so the daily level, for example, they're all based on a similar calculation. They look at basically looking at the previous days. They're looking at the open, at the high, and the low, and the close of every day. All right, so for the daily, they look at the previous day's high, the previous day's low, and the previous day's close. And then it works out a calculation based on fib numbers to post different levels from S1. I've got for all the way if you look here, I've got S1 all the way to S5 with each one. And the same applies to the weekly. So for week, it'll look at the previous week's high, the previous week's low, and the previous week's close. The same with month, it looks at the previous month's high, the previous month's low, and the previous month's close, and the same for quarterly. It'll look at the previous quarter's high, low, and close. And then using fib number calculations, it works out 10 levels for each one. So from S1 to S5. And what those lines are points of potential support and resistance. And so it's important in trading to know when price is likely to stop moving up or stop moving down or pivot and reverse. So especially when we do our live event and we look at potentially taking some counter trends and even some reversals. And I was saying to Ty, there's like 4 kinds of ways to trade. I mean, maybe more, but basically you get something called a pullback. For example, over here, that's a pullback. And if a pullback turns to reversal, getting in right at the top for a pull down is a reversal. Once a trend begins to get momentum, then it's called a counter trend if you're on the wrong side of the 233, and then there's trading with trend. But for reversals and for counter trends, like here's a counter trend that moved up some like great pips on the 3 minute there. You'll need to, one of the rules for taking a counter trend or reversal is what we call rejection of a line. Now, there are a number of lines that price can reject, but one of the keys are these pivot points. And so you will see, I will just quickly go now through how we're doing great for time to show you how price respects these. And there are great potential for taking trades. So if I just click firstly on the daily levels, and let's look at how price respected the daily levels. So I'm on the 3 minute here. So let's have a look. If we just look back to I mean, price hasn't really picked up momentum during the day, but if we have a look, for example, we can see that price often moves between. So we're going to look at daily, weekly, monthly, then I'll show you how we look at quarterly. So if we just pick it up from, here's a good starting point. We can see here, this is S1. And we can see how, what time was this? This was 3:30 this morning. How price, there was a counter trend. Now you will see that signal in version 2, a great counter trend signal. And look how it came down all the way to S1. And you can see almost often, I always say this, to the millimeter, price, try to break through once, twice, bounced off, came down, tested it again, then went all the way up. And we can see it went up all the way to R, that would be R2. It couldn't get above R2. Then came all the way back down again to S1, try to get back up to R2. And then we can see again over here, there was some action around R1, rejected R1, broke through S1. And we can see almost to the millimeter to try to break through. This is S2, but couldn't break through. So, I mean, basically, the principle is that price tends to move between these pivots. And we can see, I mean, this is a great example. Let me just put a little circle here. We can see at this point here how price rejected S1 3 times. And then it went up all the way to R2. Over here, we can see it couldn't get through R2. And then it came back down again. We can see again, it came back down to S1, try to break up, try to get up to R2, couldn't. So price is always, if you just scroll back and you can look at these typical points where price, okay, now we're sort of back in range here. But you can see, for example, over here, this is going back a couple of days now. Price came down, this would have been about S5, couldn't break through S5 and moved up again. And so when you're looking at trades, I mean, one of the rules is space. And very often price respects space. So if, for example, there was a sell there and your TP3 was here, it may be wiser going for TP2. And likewise with buys. Even this morning, there was a massive move. I mean, I missed this one. This was at 9:36. I mean, it dropped about 150 pips. But price came down. It broke through S2. But you can see how it got to S3. It tested it once, 2, 3, 4. It spent 18 minutes. I mean, this is on the 3 minutes. If we just circle this area, we can see our price spent 18 minutes at S3. And when it broke through, then it dropped another, I think, 70 pips. If we take, once it broke through S3, we can see it dropped, here we go, almost, yeah, it dropped 80 pips or so. So these are crucial for understanding price action, is look to where price respects, rejects, and moves. So let me just quickly delete these. And so that is looking at the daily level. So that's why I tend to have them on, and not everyone trades with them. But I mean, my own experience is, Ty will know that I look a lot to these for setting my targets. As again for space. So if there's one in the way, it may be wise not to always go for TP3. So if I now change to weekly, the same principle applies to weekly levels. So I'm going to turn off the daily. And in fact, I meant to turn the indicator off just to, this is obviously a bit noisy with everything on. So let's just turn on the weekly. We see how price, often if it rejects a weekly level, it will turn to another weekly level. So where are we? This is today. Yep. So let's just go back to and look at what happened. Now we're looking at weekly levels. So here's a great example. We can see this was S3. So price came up, and look at price action here. Price came up, couldn't break above S3. So what happens when, so even on a weekly level, I'm trying to illustrate, even on a weekly level, when you look at a weekly pivot, if price hits a weekly pivot and rejects it, it's highly likely to move all the way down to the next weekly pivot. So we can see, when was this? This was at, what time was that? So this was today at 4:06 and 4:09. It rejected the S3. And so when it rejects something like that, you see price will keep drifting down until it finds another level. And here it got all the way down. We can see to S4. It broke through S4. And the rule of these is price always returns back to them very often. And so price broke down, tested it again, tried to pull down, came back, down, up, and eventually broke above, closed above, and then moved up. Then it came down. Now it's broken below, and now price is dropping. And so, again, I mean, I don't know if price will get down to, often it doesn't reach the fives. I think price is going to get way down to S5, which is, I've got to shrink my screen. I'll tell you why price could probably drop on the Dow all the way down to 42,807. But you will see if you go back on these weekly levels, you'll see how often price will reject. Let me just see if I can go further back here. I'm going to have to go back quite far. But if you go back and look at weekly levels, maybe taking a while to load. Well, let's move on. I won't spend time on that. Let's just go to monthly and then look at quarterly. So this will apply at every level. If we just turn off weekly and show monthly, we see what price action we see there. And the key is, there's a word we'll talk about moving forward called clusters. So clusters, when you get a whole lot of them joined together. So now we're on a monthly level. So let me just delete that quickly. We can see here we have got S1 and S2. So prices drifting between. We can see, even though we can see here, this is a monthly level, that even price action, we can see our price respects even a monthly price broke below. S1 came up, you can see exactly. It tested S1, broke away, tested it and came down. It came back to S1, rejected it, came down, came all the way up, came down, rejected, up, down, closed below. When it finally closed below, then it fell. But if you put in these monthly levels and look back far enough, you'll see, I'll just crunch it up a bit. You can see how, if you go back far enough, prices drifting between. Let's see another example. Here's a great example. So this is S2. Look here, price came up. In 3 times it tried to break through a monthly level, couldn't break through. And then when it happens, it tends to eventually drift all the way down. It'll get back down to S1. So again, when these lines are grouped together, so if I just quickly put them all on for a second, let's see if we can find a grouping. If you put all of these lines on, let's just wait for this to load. When they're grouped together, we can often find that they're stronger. Let's just go back and have a look. See if we can find a grouping like here. I call that a grouping. We've got a weekly and a daily together. Price couldn't break through. And let's see if we can find another grouping. So whenever they group together, okay, here's a bit of an example. There we've got a monthly level. Price broke above a daily, couldn't get above the monthly, came down. And let's look at one, see if we can find another example. Sometimes they are closely together like here. There's like a group. So when you got, there's a monthly and a daily. So we've got a monthly that's probably, was that S2, and there's an S5. You can see when there's a group, there's a strong reason to resist. So let's just say there was a sell signal. If TP2 was there, safe. If TP3 was below, I wouldn't go for TP3 because now you've got a cluster of pivots together. And that happens quite often when they're clustered together, they form very strong support and resistance. Well, then before I hand back to Ty, I want to look at one more thing. And you will hardly ever see quarterly levels. You could almost leave them off, but where quarterly levels are very good is for price forecasting. And so I've turned on the quarterly levels. If you just look at the last day's trading, you won't even see probably a quarterly level. They don't often show. But where they are useful is to forecasting price. And that's why I'm predicting that the Dow is going to drop potentially. Don't stake your money on this, but it could drop another 400 pips because of these pivots. So if I change this is where the quarterly is good. I'm changing this chart to a 4-hourly now. And let's look at how price has respected these pivots. So if you look at a 4-hour chart, I think I've done this before. If you go to 4-hour, if you turn all of them on, it's going to be a jungle. So I'll just turn them on quickly to show you why. When you look at the 4-hour, Just wait for them to load. It's going to look like the Matrix. Okay, you can't read a chart like that because I mean that little gap there, that is just one day. So when you're looking at a 4 hour, you only really want the quarterly on. So let me turn those off quickly. Taking a while to process that, and that should go off now. There we go. So this is now a 4 hour chart. So let's look at price action on these pivots. This is a good example. So here we've got, look at this. This is R5. So this is on the 17th of October. Well, I mean, this is brilliant. If you just look how price respects the quarterly. So let's just pick it up from the last quarter. So this is going right back to the 4th of October. So almost 3 months back. Remember, this is the 4 hourly. So look at price, 4, 1, 2, 3, 4, 5. I mean, that's already 28 hours. Price couldn't break below a quarterly. And again, it went up. Try to test a quarterly. And look here, that's 1, 2, 3, 8. That's almost like, 28 hours again. Price couldn't break below a quarterly level. So it rejected that level. What does price do? It looks to go to the next pivot point. So it rejected R3. That pink line is a R4 quarterly. And look again, and look how price gathers around. I mean, that is how many, that's going from Thursday the 17th to, how many hours is that? That is 18 candles. I mean, how many hours is that? About 18. That is a lot of time. So again, price rejects that level, comes down back to the R3 level. You can see it tries to break through, travels up and down, eventually rejects R3. This time it broke above R5, but then it comes back, R4, and look how it tests again, breaks, rejects it, up it goes. And we can see now why I'm saying price is still going to drop is because where's price headed on the 4 hour, it's going to come back to the quarterly. So this is one of the best ways to predict where price is going to go. So if we look at the gap over there, if we measure that where price is currently now, there is 368 pips down to the R4 quarterly. And if we put on the indicator, let's just turn it on. You can see even for counter trends, it's a good counter trend signal. On the 4 hour, price is broken below the 233 and it's now heading. That's another change. I put a star instead of that little wedge we used to have. So I would say this is a high level probability based on understanding price action with these pivots that price is going to come down almost 400 pips to this level. Then it's going to be interesting to see what happens. It may break through. There is a demand zone and move up again. But my prediction is for the next how many days? So this is going all the way up. We don't know how soon it's going to get there, but for the next 5 days, it may take, what's the date today? A few days. But price is definitely bearish on the Dow, probably heading to that level. And we can see the MACD is just crossing over. We can see also once price was breaking below the 233, we've got a triangle down, which is re-enter, reverse re-enter. So that's looking very bullish. Also, the candles are bright red on the 4 hour, which is a strong indication price is still going to move down. All right, so that's basically what I want to talk about tonight, how the pivots worked. And again, for more high time frame price forecasting, that's what I mainly use the quarterly for, is to just have a look at high time frames. So I think, Ty, I'll land it there and hand back to you.
Yeah, that was loaded, Dad. Okay, well, before you do, I got one more question, which Aaron asked up above about, Heikin-ashi versus normal. So could you please explain and the pivot levels, why they're so different from standard candles to Heikin-ashi? And I've got a little bit of a ChatGPT answer here as well. But yeah, do you only worry about the pivots for Heikin-ashi candles personally, or both? I mean, I do both, but for yourself, how do you find it in terms of price action and what you see?
Well, let's change it to the 4 hour and see what it looks like here. You can see it's respecting both, so they work for both. So this is the 4 hour. So in this case, with normal candles, there was a great rejection. What is this? The R2 quarterly rejected there. It hung around the R3, moved up. You can see it hung around the R4. I mean, they both work, so you can use both of them. I know sometimes I do look at both, but the reason why they're different is because of the shape of the candles. I mean, it should be more accurate on normal candles because it is looking at the open and the close, like of a daily candle. And the Heikin-ashi are not based, the Heikin-ashi, if you look at the Heikin-ashi candles, the open is halfway. If you're in a bearish, each candle opens halfway up the previous candle. But it was just a fluke finding that it just worked out. So what is your chat GPT answer, Ty?
Pretty chunky. I just posted in the chat, but basically it's saying what
Nice.
you just said. It's saying the raw data from standard candles could be potentially more sensitive, and Heikin-ashi can be a bit more smooth or lagging, and yeah, so it's always going to be both, guys. You're going to see both levels respected. So that's why for me, I very often have my 1 minute chart set to normal candles because I just read a lot of 1 minute price action. I don't necessarily need how do I phrase this? I don't need the trend strength to convince me to stay in a trade from the 1 minute, but I keep my 3 minute and above, like 3 or 5 or 8, whatever, on Heikin-ashi, and then I've got a separate chart, like a 15 minute, where I also have on normal. But I will, if I'm doing some just analysis and just looking at charts, like 4 hour charts, I'll bounce between them because yeah, this indicator does perform slightly differently. You'll see that the TFO will behave a little bit differently as well. Dad, you can comment on that if you want, between Heikin-ashi and not. So
Yeah.
pays to have an eyeball on each, in my
Yeah.
perspective.
Yeah, I mean, basically, Heikin-ashi are smoother. And so obviously it's a smoother look if you compare. These are 4 hour Heikin-ashi. If I click to normal candles, it's obviously it's not as smooth. I find it harder to read a chart like that. I mean, obviously the strengths are each candle does give you a lot of information, like you get engulfing candles. You can see the gaps that Tyron speaks a lot about. But I just find everything smoother. So in terms of the oscillator too, the oscillator is often smoother with Heikin-ashi candles. So if you look, it's showing pullbacks there. If we go back to Heikin-ashi candles, you're going to get maybe a smoother look. So it's not always true, but I just find it easier. And with Heikin-ashi candles, the higher the time frame, the more accurate they become. I mean, I find them great on the 1 minute too, but it's personal choice. I know some people have a strong feeling each way. I mean, for me, I'm kind of quite busy with my time in the mornings. I do other things. And I find with Heikin-ashi, I just take one look at a chart, a glance, and I get a good feel. So what I'm going to, just for fun here, let's just see whether I open my paper trading account. And I'm just going to do a little swing trade here. It's a late entry. See if I can get in on this trade here. And let's just see if this trade, I'll keep you posted. I'm going to put my take profit, 350 pips. Look, I'm already in profit. Come on. I'm going to take it back.
There you go.
I'm going to put a big stop loss. Okay, I'm going to put it above the POC. But let's just see in the next days how that plays out. If my theory on price dropping another 350 pips gets there or not.
Totally agree with that theory. Obviously, price can do anything in between pivots, but yeah, right with you on that one. I think
Yeah.
Joe just commented there on the TV. The TV saying that the Dow is on the longest losing run since 2018 right
Yeah.
now. And oh man, I don't know if you guys have witnessed why the NAS is flying and why you could almost say they're decoupling a bit. I don't know if you guys are aware that the MicroStrategy, Michael Saylor's company, has just been added into the NAS or is been announced to be added in the next week, and so they're dropping Moderna, which I find quite funny, and adding Michael Saylor's company, MicroStrategy, which is basically a giant Bitcoin holding company, into the NAS, which is the top 100 tech stock. So that is why the NAS is pumped a little bit as well in this last few days. Yeah, question. I've got a couple. So, question. Okay, so from Mo, how do you guys deal with greed? Struggle with this a lot. Okay, really good question, bro. So the different, and Dad, you can answer in a minute.
Yeah.
All the different emotional things that we each handle. There's FOMO, fear of missing out, fear of loss, and then greed. So they're each going to manifest in different ways for each of us at different times. So I remember when I had fear of loss, for instance, in my early days making some losses, I was very quick to want to move my stop to break even because I had a fear of losing. And how many times can you imagine I got knocked out for break even or 1 pip and then price as it would return to my entry and then whizzed off to my target. So eventually that you defeat that one by a lot of back testing and a lot of witnessing and belief in your setup and your strategy, and then that gives you the confidence to just let it run a little bit away from your entry before moving. FOMO, fear of missing out. I mean, that's a life thing, right? That I destroyed that one with. I remember someone once saying that the opportunity of a lifetime shows up in the charts once every 2 weeks, and it just does. Like, and when you see how, we can often get a bit messed up with the hour to hour, day to day, but when you zoom out and look at how often there really is a phenomenal setup, you just know that it's going to come again. And if you miss it today, there was another day tomorrow. But the greed one's a real one, man. That has been my most difficult one of the three to slay, and it's the one I get tempted with the most. When I take an entry, I can suddenly talk myself into believing I've just caught the reversal and it's the bottom of a move and this thing's going to fly. And I love dragging my TP far into the clouds. But I have realized over and over and over again that I just need to put that thing onto TP 2 or 3, close some trades, or just move my stop up if I really believe it's going to run. And then they're just bank profits. I remember Curtis Cobain saying, no one goes broke by taking profits. And if you think about compounding wins, even if you're compounding 1-to-1s over and over again, and 1-to-2s every now and then, you're gonna have a much higher strike rate. And I'm getting real. Like, that's the one I struggle with the most, man. So yeah, I can see Jordash saying the same, struggling with greed the most as well. It's a real thing. And then Zeph saying, same, don't touch the TP. So Dad, I mean, any of your commentary around the mindset?
Oh, we're going to do a whole session on that. That's what's planned for the 7th. Is it the 7th of January?
Yep. There you go.
I'm going to talk about risk management, greed, all those things. I mean, that's part of the reason for having the take profits, because it takes that out. It's if you're not a mechanical trader, your emotions and greed, all those things are going to take over. So the whole point of this indicator was to try and develop a mechanical way of trading. And that's why I place great emphasis on, TP1, TP2, TP3, because then it's purely mechanical. Should I have stayed in, shouldn't I? Well, if you are just going to take TP2 every time, 2-to-1, you will become wealthy, And sure, there will be trades that will, it's the knock it out the park kind of trades where it goes for 100 pips. But those are rare. My experience is you see them a lot, but they're actually hard to stay in and take unless you're really skilled. So, I mean, I'm going to cover that on January the 7th and talk about all those emotions and talk about risk management, those kind of things. And then how to set your risk if you're a beginner, intermediate, or skilled trader. Look at those 3 things. So I'll spend a lot of time. But again, we're trying to develop a mechanical system of trading that takes away the emotions of greed in that. Because if you follow the rules and you go for the take profits, then greed doesn't come in. You're simply obeying the rules, and you at least want to get a 2-to-1 with every trade. You'll become wealthy and successful just doing that.
So good. Thank you, Dad. One more question from Jono up above. Talking about time frames, most ideal times, a common question with things like when are the windows of times that you wouldn't trade the NAS or the Dow, or maybe gold any other time. So I mean, think about your answer. Mine would be, I've historically seen that the Dow moves the best when American volume is involved. So the Dow being the Dow Jones and the index of American companies specifically. So you'll find London and Asia and Sydney, they don't have as much vested interest in the Dow as maybe the NAS, which is the top 100 tech stocks in the world. So you'll see the NAS moving across all sessions a bit more. Obviously, you're going to see the JPN move a whole lot more in Asia, but I've noticed that gold tends to move pretty well all the time. Like, it moves. There's always going to be rangier times of day, but I've found that gold tends to move a lot. So yeah, that'd be my take on it. There's you could probably leave the Dow to when America is open, or London. I mean, look, even right now, it's London, and you're going to see movements, especially when you've got some giant things happening. But traditionally, I've noticed that NAS moves better with London and New York, obviously, and then the Dow moves better on American volume, and gold tends to have some movements throughout, especially with Asia too in the middle of the day. So, Dad, your take?
And you've answered. I don't think I can add to that. I mean, Asia, if you trade the Nikkei, definitely from lunchtime onwards, it goes from midday lunchtime all the way until the early evening. They're big moves. Gold all day, and Ty, you nailed it. Sometimes there'll be more movement in the NAS with the London Open than the Dow. But for many of us in New Zealand who are not full-time traders, we tend to trade, early morning, which is mostly the New York afternoon session. And that's probably the best time for us to trade. I mean, for those listening overseas, Australia, you'd have to just work out the times there. But for me, I find I like trading in the morning. There's enough movement usually. I mean, it has been a bit mixed up, but generally, if you spend 2 hours on the charts in the afternoon session, which is our early morning, there are normally more than enough opportunities to make at least 30 pips a day. So I find that sufficient.
Really cool. I'm gonna share my screen for a moment and show
Okay.
you an example, guys, on how you can go and figure this out. I mentioned it at the live event, but I don't think I put it in into the recording. So let me just share my screen there. Hopefully you can all see that. Someone, Dad, you can say something if you can see it. But
Okay.
right now,
I can't get my screen off. Wait.
no, that's fine. I'm
Okay,
pretty
there we
sure
go.
you
I've got
should
it
be able
all.
to see this.
Yep. I've got
So
you
this
back.
is gold. And right now, if you turn on this indicator, guys, Lux Algo Sessions, just search for that. You're going to see all of the trading sessions. So you're going to see there's Sydney in yellow, Tokyo, Asia in red, London in blue, New York in this kind of brownie color. And so you can see the highs and lows and things like that. So this is what I do. I will sometimes start like this and I will, look, there's going to be a lot of mess here, but lots of different trend lines. Like you can see gold literally just bounced on quite a major trend line going back to there to there. We just touched that at the beginning of this session and I put a cheeky buy on there on demo right on that bounce and it ran straight up to the top of that other trend line, which is still in place. But anyway, what I like to usually do is you can see here, I put these.
That's how we can't see your screen. Sorry.
Oh, you
We've got
can't?
you.
Sorry, I can't see the chat to see any of that. Okay, wait.
No
You can't?
screen. Sorry.
Let me, okay, hang on. Let me pull up the chat because people have probably been screaming at me that they can't see it too, but I can't see the chat. Let me stop sharing.
We can see your screen. We can see your screen.
Okay, cool. No, it's because I have pinned Dad. So let me just do this.
I can't see the screen. Sorry.
That's cool. I'm gonna unpin you, Dad, and then you should be able to. So I'll remove you, pin me, and I'll go back to it. Okay, there we go. Can see it. All right, we'll go back to it. Ping, ping, ping. There we go. Okay, so what I was showing you guys here is I'm just, you can turn off your drawings, the little eyeball button over there. So turning them on, what I'll often do is if I'm looking at price right here, it can be a little noisy. I don't put the sessions on usually like this all the time, but I'll turn them on just to go see, okay, there was the low of Asia. And I've got a trend line on it already, but I'll draw a red line there and maybe a red line there. There's a blue line for the bottom of London. There's a blue line for the bottom of London. Sure enough, what happened? The price came down, bing, pretty much just above. I don't actually think it stop 100 that one perfectly. But then, again, I'll usually come through and, I mean, that's a redundant one. I don't know what he's doing, but I'll put him over there, like at the top of the previous New York session up there, or even that one. No, yeah, there. That's the height of New York over there, that kind of thing. So then I'm aware of where price often wants to go and stop hunt. And you can see this over and over and over again. But this is also how you can go and check and see when things like to move. So this is gold. And obviously you start to get a bit of a feel for, okay, price, it moves. You can see inside of every session, you always get Sydney's always the most flat usually, but once Asia kicks in, there's a bit of movement. London, plenty of movement. New York, plenty of movement. Sydney again, a little bit less. Tokyo picks up, but it's been a bit sideways for the last couple of days in there on these when you're really looking at it. But then, what about US 30? Going on US 30, this is the 15-minute chart, so there's a lot, it's a little bit, let's just maybe make it a 1 hour. That might make it a little bit easier to digest. So then, yeah, you can start to see, okay, how big are these blocks? So again, Sydney, tiny, Tokyo, tiny, London, a bit of volume, New York, way more volume. Again, New York, way more volume, London, quite a lot, New York, quite a lot more. And again, New York more than London, New York more than London, New York more than London, New York more than London. So the best time to trade the Dow in terms of the most movement is always going to be when there's New York volume in place. Let's look at the NAS. 1 hour chart again. Well, the NAS has just been obviously on an absolute run, but you can kind of see the same sort of thing. You've got London and New York with the most, not much at all with Sydney and Tokyo, not much at all, not much at all, a little bit of runs, not much at all. Shink. So you kind of will get the gist of when things move if you just start messing around with this kind of an indicator. So again, London, New York, boom, Sydney, nothing, Tokyo, a little bit, London, boom, New York, boom, nothing, Sydney, Tokyo, boom. So we historically never used to trade during the day, and most of us have got jobs and whatnot, but because NAS was what most of us traded when we got started, And you can see with London, there's great things. In New York, there's even better things. So that's how I approach that. And then, yeah, I mean, JPN, you're probably going to see, I don't know, I never really pay much attention to it. But yeah, there's definitely opportunities to trade it in Asia. But yeah, still same thing. Probably lots of movement on things. A little bit more even, to be honest, looking at that. And back to gold. On that 1 hour chart, you can see that there at least is tradable stuff within Asia as well. It's a little less rangy than, say, the NAS or the Dow. So yeah, guys, hope that helps. Once again, that's just Lux Algo sessions. Highly recommend you go get that. That is what I always pretty much turn on a daily basis. I don't know who Lux is, but he's got some good stuff. So there we go. Let me just roll down, check if there's any other questions. Otherwise, that was that. So yeah, guys, just wrapping up in terms of our calendar. So tonight is our last Tuesday night for this year, because next week Tuesday is Christmas Eve. So I'm sure none of you are going to be here or want to be here. And then the following Tuesday is the 31st, New Year's Eve. None of us are going to be on Zoom on New Year's Eve, but then so no more Tuesday nights until the 7th. But so today's the 17th. This Thursday in a couple days being the 19th, we've got a live Zoom, trading Zoom like we did last week. So live trading with us 5 till about 6:30 in the morning with Dad, doing some live analysis. So I'll drop a Zoom link in the chat just before that. And that'll be us for this year. So it'll be the 19th. And then we'll come back on the 7th of Jan, and I'll post all this in our group chat. But the 7th of Jan, Tuesday night, Dad's got a full thing on risk management, compounding, and like you said before, the mindset, the emotions that go with it. So that's coming on the 7th. And then we've also got the 7th. Then we'll probably do a live trading one on the 9th, that Thursday. And then the 14th, we've already mapped that out. That'll be a big brief on version 2. And then our live event, you can save the date for, I should check this with my wife probably, but for now we're aiming for Sunday, the 19th of January. And that is when you guys are getting access to version 2. So that's why we'll do the Tuesday night briefing everyone on version 2. That Sunday, probably the same format as our last one earlier, potentially a meal, and then rocking into training on version 2. And then I'll edit that recording and dump that on YouTube for everyone that couldn't make it for the Tuesday night, the 21st. So that's our plan at the moment, team. So, already can't wait to be back in the room with a bunch of you, because that was solid, good fun. And then, yeah, guys, that's our plan. So stay tuned. I can see a bunch of, you've already got your auto payments coming in. Really appreciate that because we've just entered our 2nd month. Can you believe it? 1 month in the books for TRENDFORCE. So really exciting historical stuff. And I know some of you internationals are still figuring out maybe some PayPal stuff, but really appreciate the auto payments showing up for that, because we're busy having chats with designers and figuring out what it looks like to get our branding sorted before we record any content, like onboarding content for brand new people, because we want to have really congruent language throughout. So for now, just excited to be running with each and every one of you. You guys, to some degree, already know what you're doing, which is really special. And so learning how to ride this bike together and learning it together, being able to add value and give us feedback on it's really, really cool, so that we can fine tune it and add things. Like, I mean, guys, without the feedback from you right out the gate, we wouldn't have had alerts. And that's been massive already. So you guys are each adding so much value to this. And I know that one day we're going to look back on this and you're going to be able to say you were part of the original launch of TRENDFORCE and have been able to add value along the way. So very, very special stuff. So with that, last thing, guys, I'll put something in our Fit Live Facebook page probably tonight, if not tomorrow, but Thursday evening this week, Rich and I are going to be doing a Zoom together with a very experienced entrepreneur in America, just to give some people some updates on what we've been doing in terms of the fit life. We are all about leveling up financially, like we are right here, but also physically with our health on the inside and out. And so we've been testing some things over the last few months product-wise, and the results are real. And so at this point, we're finally crossing the line to actually just let the cat out of the bag of what this thing is, and want to invite those to take a look at it. I know a bunch of you were asking me heaps of questions about it at our live event who saw me with it, and yeah, I'll leave the mystery factor at that for now. Otherwise, guys, we'll see you on Thursday morning for our live trading session, Thursday night for that special presentation I just mentioned. In the meanwhile, trade safe, love you lots. We'll catch you in the chat. All right, good night, everyone.